Hello, everyone. Welcome to Wall Street for Main Street podcast. My name is Mo Dawood, and today's special guest is Ziad Abdelnour. He is an author, trader, financial activist, lobbyist, and philanthropist. He is the president and CEO of Blackhawk Partners, and he's also the founder and president of the Financial Policy Council. Thank you for joining me today.
My pleasure, Mo.
Well, there's a lot of talk out there in the market and the economy about what the Federal Reserve is going to do next. A lot of talk about whether they're going to pull back on the QE program or continue it. And a lot of the economic numbers and job numbers seem to support that the economy is not improving, but yet they're still thinking about pulling back. Do you believe the Federal Reserve will pull back on the QE program in the near future?
Well, I think at this stage, there's a new element you have to include, which was not in the equation a month ago or 2 months ago, which is the impending war or strike or whatever you want to call it in the Middle East. That's going to change, that is a game changer, and that's going to change a lot of things in the economy. I think I'm not trying to be pessimistic or Mr. Doom and Gloom here, but I think this is going to be a protracted war that's going to last some time, and that's going to affect the economy in a major way. Forget about recovery. We didn't get the recovery yet. Now it's for sure we're not going to see any recovery anytime soon. So the actions of the Fed are going to be based on that. No equation that they're going to have to factor in. Every time now I talk about economy or Fed policy or Wall Street, you're going to have to take this into account. That's a totally new factor. You cannot discount it. You cannot underestimate what's going to happen. I really believe this is going to escalate to much more than a strike. And it's going to, have the credit markets, stock markets, bond markets, everything going tumbling, and the commodities prices increasing, going up the roof. So to answer your question, do I believe the Fed will pull back on the QE program in the future? I don't think so, given it's not going to get better.
And interesting that you mentioned the potential strike in Syria and how that relate to the QE program. The government, every time it goes into another country and do a military strike, it costs money, and that's the money that the government doesn't have. So they have to borrow that money from the Federal Reserve. So
that's exactly what I'm saying. That's why I don't think it's gonna. I mean, it's not gonna get better. I don't see a recovery soon, Mo. I don't see the Fed is gonna be less aggressive. They're gonna be more aggressive, more interventionist, given the markets are not gonna get better, and given the situation we are in with Syria, that's gonna last some time. This is not gonna be like you have 60 days, 90 days, you go there and you do your job and everything will be okay. No, I mean, this is what we said is gonna happen in Iraq. Remember, it lasts years, decades. I mean, at least a decade. I mean, this is. You can't control these things, and the Fed will act accordingly to stabilize the markets or to help or hinder or whatever it is.
Right, and who knows what the real agenda for the government and the Federal Reserve regarding the military strike. Maybe they do want to stay there longer than 60, 90 days. So we'll see what happened there.
Look, at the end of the day, they're saying right now, we don't want to talk about the politics right now, but just a small word. At the end of the day, they're saying limited strike, but the way it's evolving, the way I see it, and I talk to a lot of people in Congress here and there, it's not going to be limited. It's going to escalate, that's for sure.
And I agree. So moving on to the stock market, I did a lot of experts out there, said Marsh Barber and other people saying the stock market will crash eventually. But with the Federal Reserve continuing to print money, do you believe the stock market will ever crash?
The stock market will crash. I mean, crash, I don't know how you define crash, how much you want to see the stock market going down to define it as crash, but there's definitely going to be some major adjustment. I'm very bearish on stocks, bonds, real estate, everything. The only place to be is in the commodities markets, oil, gold, etc. Because of the war, because of the situation, oil access and everything. The stock market is definitely going to be tremendously affected. I don't see any recovery anytime soon. Let me put this off. Sorry. I don't see any recovery anytime soon, and this is going to tremendously affect the stock market. I am very bearish on the stock market.
That's a great point there, and there's also a lot of talk about whether this economy is going through deflation or inflation, or maybe both. I've heard people talk about that we have both inflation and deflation going on here.
Yeah.
Go ahead.
I tend to agree with that. We're seeing asset deflation and price inflation, and this is gonna think about it. Okay, God forbid you have a war. I always think about all kinds of scenarios because business is war. I mean, this is not anymore a bunch of analysts, economists on Wall Street predicting this and that. Frankly, they don't know anything because they don't know anything about. They don't understand the geopolitical process. Think about, God forbid, think about the scenario where you have some wacko coming to New York City and start to shooting some people on the street. If ever this scenario happens, and you know what, everything is possible. God forbids, prices of New York real estate are going to go down by 20-30% down. They said, Manhattan prices are untouchable. It's going to always be like this. Not true. When terrorism hits, and not terrorism like 9/11, I'm talking about, some instability. Every wealthy guy, foreigner or American, is going to start looking for other places. I see tremendous asset deflation. I totally agree here with David Stockman when you read his book. And price inflation, yeah, because of commodities, food, water, every commodity out there, food, water, oil, gold, everything's going up. The play is in the commodities markets. That's where the play is. I've been buying gold for the last 5 years, never sold gold. Whatever it goes down, never sold. What are you going to sell gold and buy what? US dollars? I mean, what are you going to buy? Gold, oil, and all the commodities prices are going to go up. Price inflation, yes. Asset deflation, yes. I agree with that point of view.
And also, if you look at the goods out there that are non-discretionary, like computer, electronic, flat screen TVs, all those type of goods are going down in prices. So people look at that and see, we're not going through inflation, we're going through deflation.
No, that's different. This is not commodity. This is technology. You can't confuse the two. Commodity is something, yeah, but you go to the supermarket, you're paying much more for grocery. That's different. That's food. That's commodity. The technology, because of the progress technology, competition, less competition, all that kind of stuff, more availability, is going down. Technology the prices will always keep going down. Doesn't have this. Technology is not a necessity. It's not a commodity. It's a necessity. The others are necessities. They're going to go out. Technology, there's always new technology, more competitors, more innovation, more creativity, more players. You cannot compare the two. That's very different. Don't confuse technology with commodities like food. Technology is not a commodity.
Yeah, and I agree with you there. And that's a common misconception I get from people out there, that when you argue inflation, they look at electronic prices and they say, well, the price is going down, so there's no inflation. So I just wanted to point that out for our listeners out there.
Yeah.
So moving on, have you noticed there's a lot of protests going on in this country and all around the world for higher wages? You got miners in South Africa going on strike because they want higher wages. In this country, we're seeing people go on strike, especially in the fast food industry, because they want higher wages. So many Americans, mainly liberals and progressive, are pushing corporations to pay their employees higher wages. What do you think will be the unintended consequences if fast food industry started to pay their employees higher wages? And what would be the free market solution to this problem?
Well, I think this is wrong. What? Higher wages, higher taxes, more regulation. What's next? Till when there's going to be a stop to all of this? they're killing the goose, that's laying the golden eggs here. That's killing, this is wealth bashing. They're killing corporate America. A lot of corporate America, a lot of the companies are moving elsewhere. I think you should leave it to, this is a free market solution. Look, maybe the minimum wage should be increased. I haven't done a study or research on that. Obviously, people have to live, people have to be. Look, it's whatever the higher wages. Look at the cost of education. Education has gone much higher than the wages. So there has to be some equality here. But I would, I like to leave this to free market solutions. The government cannot keep intervening more and more in corporate America because they know better. They don't know better. If they knew better, they would manage their house much better. Look at the mess we are in, $16 trillion in debt. Now the government is going to teach us how to manage our checkbook. They can't even manage their own checkbook. They're going to go and tell corporations how to manage, who to pay, how to tax. They cannot even do it themselves. You want to serve as a role model and give theories? Do it yourself. Show me your track record. I'll follow your track record. I'll follow the track record of anyone who is successful doing it. Not somebody who's been making mistake after mistake and putting us in this mess, then coming and tell us what to do or how to do it. It's insane.
And to give an example, in Washington, D.C., Walmart was planning on opening 3 new stores. And the D.C. government wanted Walmart to pay their employees $12.50 instead of the minimum wage, so they can, have better standard of living. So Walmart came back and said if they pass this bill to increase minimum wage for Walmart, they're going to end up closing their plan to open 3 more new stores there. So there's no job for the lower class if they pass this bill. So this is one of the unintended consequences when government starts to intervene for higher wages. The corporation will start cutting back, closing down the store, laying off people just to protect their profit margin.
Yeah, look, I answered your question already. This is unacceptable. And even if we increase the minimum wage, this is not going to solve the situation. With the war, etc., prices are going to increase even much faster. We are going through price inflation. Look, it's basically, it's up to the companies to decide these things. Can't have the government interfere in these things and screw up things even more.
Oh yeah, I agree with you there. So let's shift gear here and talk about the oil market.
Yeah.
Which is your expertise, one of them. The oil price has been in a trading range for the past few years, from between $110 and $80. And do you agree that the oil price will be stuck in this trading range for the near future due to the stagnant growth in the global economy?
No, the oil prices are going to go much higher than that. Now it's a totally different equation, as I told you. You have to factor in what's going on in our military intervention in the Middle East, the escalating war out there. This is going to drive oil prices, gold prices, everything, every commodity much, much higher. There is no trading range. All this trading range, all this Wall Street analysts, economists, forget about it. You can throw it to the garbage. It doesn't mean nothing. It's going to get much higher. It's going to be very disruptive. It doesn't mean that in markets like this you cannot make a lot of money if you know what you're doing, if you can analyze it. Look, I basically make investments and look at the market by following troops on the ground, by following military, by following trends like this. You have to understand the geopolitical trends. You have to make your bets based on that, not by what your broker or your economist says to you. They have agendas. All what they want to survive. They see the hurricane around the ground, they want to survive. So they try to tell their people, oh, everything's going to be okay. Nothing is going to be okay. It's not okay. Neither on the economy nor on the military. It's not okay. Brace yourself. There's a huge storm coming. And you have to be very careful and do your homework and do your due diligence and stop listening to some expert who knows nothing. All these guys are supposed to be expert for. Remember, they were all bailed out. They were all went bankrupt. They would have gone bankrupt if they weren't bailed out, all of them. So there's nothing smart about them. Do your own homework. Stop being influenced by the big brand name, the guy who tells you, I know this, I know that. Do your homework. It's gonna get very bad, very ugly. I'm not here, Mr. Doom and Gloom, but I'm trying to position myself to make a lot of money in times like this. And you can, and everybody can, anybody who does his homework.
And yeah, you're correct there. With the potential strike in Syria, I mean, all bets are off. Oil price will go up.
Exactly.
Do you think it's possible it will go past the old high back in 2008?
It's very possible, depending on how involved we are and how long this will take, and depending on a number of factors. But it's not going down anytime soon.
And it also another topic that's popular within the oil industry is the concept of peak oil. And it basically doesn't mean we're running out of oil, just we're running out of the cheap oil that we're all accustomed to back in the day, where, you poke a hole in the ground and a gush of oil start coming out. You see a lot of companies now going to the deep sea for oil, or they're also doing the shale, the boom in the shale oil too. Do you agree the era of cheap oil is coming to an end, that high prices will be the norm for in the future?
High prices will be the norm. Look at all the parties involved in the war in the Middle East. All of them are rich oil-producing countries. Russia, Saudi Arabia, Iraq. They're all in the top, all rich-producing countries. If you look at Russia, this is the basis of their economy. It's oil. It's all about oil. You have today 98 billionaires in Russia. 96% of them made their money in oil, are oil traders, physical oil traders. It's all in the oil. So, given the characters involved, of the players, oil producers, oil players, and, in wars, I definitely see oil going only up, staying there, going higher. We just have to get used to it. We just have to adjust our economy, our investment strategy, everything based on that. And if you have, if something good happens out of it, that's fine. But that's how it should be, yes. I always look at, what if? A lot of people don't want to look at the what if. Well, they're in a state of denial. You cannot be in a state of denial. The markets are what they are. You can't have an attitude. You can't have an ego. You can't have feelings toward that. It's cold-blooded. This is where the markets are. This is where how and where you react. Wake up, guys. Wake up, people. Definitely, it's not. Look, the United States will never be like it used to be. I'm not going to say never. Nothing is never. But we're going to go through very difficult times for the next 5 to 10 years, this decade, between the wars, between the debt, between the Fed's policy, between the wealth bashing, between the excess regulation. These are facts. A lot of people are trying to, for political reasons, they're trying to make them go away or make them, oh, it's okay, no problem, don't worry. Well, I worry a lot. And there is cause to worry. These are facts on the ground. This is not some theory, some economic theory I'm throwing. And all these theories are worth nothing. We go back to Keynesian economics. Who the hell is John Maynard Keynes? He's the guy who died approximately 100 years ago. And we're still applying his theories, his antiquated, non-workable theories to today's world, where it's much more complex and, and much more dangerous on top of it, given the wars, given the ammunitions we have, given it's a powder keg where any smaller thing can trigger major catastrophes, major disasters. So, we have to be very aware of these things. People listen a lot to economists, to theoreticians, to people with ideas. No, you have to look at the facts and not be in denial on everything and try to magnify the facts. What if, what if, what if? What if you have a bunch of terrorists who come to New York City and start shooting people? God forbids. Do you know what this will happen to New York real estate market, Wall Street, everything? People don't think about that. And you know what? If we go full blast after these guys, and we should go, by the way, I advocate regime change in Syria. You have to break the axis. But you know, a lot of people can turn loose and can start doing all kinds of things. You can't control this. We have excellent intelligence, technology, security, but you can control this. And this will obviously affect the markets, affect everything. Real estate markets, bond markets, credit markets, stock markets. You know, a lot of things are not anymore in our control, and more than ever, unlike 20, 30, 40, 50 years ago, where the world was pretty much under control, the Russians and the Americans, Cold War. A lot of things are not under control. So you are going to have much more volatility, much more uncertainty, much more, scenarios that are totally out of whack. And you have to be ready to move accordingly, not stick to your old theories. Like Warren Buffett says, you know what, stocks is the best thing. Forget about being a trader. I'm a long-term investor. Who in his right mind today should be or is a long-term investor of stocks? Only idiots. Because it's not going to be like this. The way Warren Buffett made his money, and he's a very smart guy, I have a lot of respect for him, you cannot make money today. You have to think very differently. You cannot make money the same way that Warren Buffett made his money. A lot of guys stick to it. Oh, he's the Oracle of Omaha. He knows it all. I'm going to do what he did. Well, what he did is different. It's a very different world. You have to take this into account. Old habits die hard. People don't change their habits because this is what they've been doing, or this is what their father or brother or friend or some investment guru has been doing. No. It's an ever-changing, ever-dynamic world where every factor has to be taken into account.
And I agree with you. The era of buying and holding investment is over, mainly because of a lot of volatility and government intervention in the economy and the stock market. When Warren Buffett was investing back in the day, there was less intervention in the market and the economy, so buy and hold would work. So, but now it's not going to work anymore. Too many boom and bust in the business cycle,
Yeah.
And buying and hold just won't work right now.
Yeah.
So, going back to the concept of peak oil, you interact with a lot of people in the oil industry. Do they agree or disagree with the concept of peak oil?
Frankly, they don't care about that. All what they care about is moving the oil and making a buck. Most of the people in that industry are not analysts. This is not a bunch of Wall Street analysts. They are a bunch of deal makers who are, who are there to make a buck. I personally believe that oil prices are only, there's no such thing as a peak oil. I mean, we've been talking about peak oil for the last 50 years. Every generation, now is peak oil. Now is peak oil. I stopped thinking about that. Now is peak oil. I mean, it's not going to be. Oil is here to stay. Oil prices are here to stay and go much further up. Volatility is going to be much more. I mean, there's no need of super analyzing this. I mean, we have to recognize the power of oil today in the world, and everything is about oil. Stock market, credit markets, bond markets, wars, everything is about oil. And Russia fully understands it, and Putin fully understands it too. That's it.
I think a lot of the government out there wanna have higher oil prices because oil is the number one revenue for the government, and to meet their campaign promises, they need that revenue from higher oil prices.
Exactly.
Yeah. So I saw some figures and facts, and we wrote about this as well, that in Russia, in order for them to meet their campaign promises, they need oil to be at 110.
Exactly.
And a lot of the Middle East countries, they need oil around $90 just to meet their campaign promise and prevent riots and revolts around the world.
Exactly. And as I told you before, look what's happened. Look at the contenders in the Middle East war. They're all producing countries. So frankly, the more war, the more stability, the more they can, the higher price they can sell their oil. From the Saudis to the Iraqis to the Kuwaitis to the Russians to everybody.
Yeah, exactly, and I agree. So shifting the gear from oil, I know other than oil, and then you mentioned gold that you're bullish on. What other commodities are you buying?
Gold, silver, and oil. That's pretty much the commodities I deal with. Gold is gonna definitely. I told you I've been buying gold, for years now. I never sell my gold. It's like people buy their real estate and they never sell it, but that's very different. When you buy gold, you don't sell gold. You keep it, and it's only going up. Silver has, look at this year. It has gone up by, I don't know how much, 30%. That's a great return. But I focus more on gold. But this is it. I mean, I invest in water companies, food companies, commodity plays, gold, silver, oil. I'm very focusing on the commodities markets. Bigger world, uh, uh, less control, more instability, more wars. Commodities is key. There's a limited supply. Uh, and this is why I'm involved with the physical commodities trading of the business, because if you can move the oil, move the commodities around the world, you're pretty much in control of the allocation.
And speaking of gold and silver prices, they've been stalling for the past 2 years. 2013 was pretty rough for both of these precious metals. Gold going down.
They've been stalling because it's all rigged by the governments. But you know what?
Right.
It's all rigged. Come on. This is why they've been stalling. But they will not be stalling for long, given what's happening today. I tell you, you have to factor in what's happening. This is a huge game changer, what is actually happening in the Middle East. And you know what? Syria is not Iraq. It's a very different story because it's in the heart of the Middle East. It's not on the sideline. It's between Turkey, Israel. I mean, it's in the heart of it all. Russia has lots of interest there. This is their boy for the last 50 years. The Chinese, because of the access to oil. It's very central. So it's a very different situation. It's much more sensitive. It's much more price sensitive. It's going to be because of Syria itself. Very different story. And the whole, with the rise of the Islamists on top of it and everything. Look, I mean, this is going to be messy like hell.
And it will be interesting to see how the price in gold and silver reacts to the strike in the Middle East, because when we went to Iraq and Afghanistan, the price of gold started to shoot up. So
yeah, exactly. And I mean, and I expect this. So this is why this stalling, this stalling has been done on purpose. It's been government controlled, direct central banks, etc. But now they can't do this anymore. You can do it up to a certain extent, but you can't. But once you get out of control, and it is going to get out of control, believe it or not, you can't control it anymore.
I agree. Well, thank you for coming back on Wall Street for Main Street podcast. I appreciate it. If people want to find out more about Blackhawk Partners and also the Financial Policy Council, where can they go?
Yeah, I mean, for Blackhawk Partners, blackhawkpartners.com. You can also check out the blogs there. I write a blog, an article every week. And for the Financial Policy Council, financialpolicycouncil.org is the website. Also, we do lots of events and articles and research and blog on the economy, on the markets, on investing, on wealth creation, on tax policies, and all that kind of stuff. Financial Policy Council is pretty much a financial policy think tank. That's all what we deal with is fiscal policy, financial policy issues. So it's a very much of a niche of a think tank. And Blackhawk, it's we're traders, we're investors, and I think between the two, they can get plenty of information on the markets, on the economy, on the policies out there, on Washington, on Wall Street, etc.
And also, you have your own personal blog now where
Yes,
you give.
yes, indeed. I have now my personal blogs. I sent you the link regarding my bio with my personal blogs over there, and I'm also all over the internet. Social media, obviously. Twitter, it's Blackhawk Inc. LinkedIn, etc.
I recommend people to check out his blog. You give out great advice and thoughts and opinions and analysis on what's going on in the economy and in politics, and a lot of good entrepreneurial advice as well. So I definitely recommend people to check that out.
Thank you, Mo.
So, well, thank you for coming back on, and hopefully you can come back on soon again.
Anytime you want, just let me know. Thank you very much for your time too, and let's stay in close touch. And please send me the podcast when it's out.
Will do.
Thank you so much, Mo.
Thank you.
Bye-bye.